What's going on, guys? Welcome to the JWK show. We talk about crypto and we keep things short and concise. We have a big update from Ripple partner Uphold telling us the future of DeFi, and we have Uphold also building one of the biggest banking services for XRP. We do have DeFi yielding, earning passive income off your XRP and RLUSD, and also spending your XRP as well with the Uphold debit card available across the US, and we have earn up to 6% back in XRP in cashbacks. We do have a lot of ways to earn free XRP via Uphold Ripple partner crypto exchange. We do have the opening of the debit card over here. Looks pretty good. And we also have Uphold CEO Simon McLowan joining the NYSE and talking about what is next for digital finance. We have borrow and earn through DeFi. We have bringing everything on chain, bridging everything together, and so on. Let's take a look at this.
Simon McLoughlin is the CEO at Uphold. He is joining us here on the floor at Money 2020 in Las Vegas, Nevada. Simon, good morning. Great to have you here today.
JD, thank you very much for having me.
Let's start first and foremost with a bit of an introduction to Uphold for anyone seeing the interview who might be a bit unfamiliar. And what are your top priorities for the firm these days?
Sure, well, Uphold is 10 years old. It's one of the oldest and most trusted names in the space. We're a platform that helps traditional companies, traditional financial institutions move on chain. There are two parts of our business. We've got a retail business that's effectively a crypto-enabled neobank, anticipating what the needs of Gen Z and Gen Alpha are going to be from a banking app in 10 years' time.
I believe Gen Alpha is obviously the next gen, but I believe it is from 2012 and older. So a new generation is coming in to invest into cryptos. And if you guys didn't know, Uphold was one of the few exchanges that did not delist XRP despite the Ripple versus SEC case, SEC going after Ripple XRP.
And the other side of our business is an API business. So if you're a company, if you're a builder, you can plug into our APIs and build on top of us. So increasingly, payment companies.
And by connecting through their API, they can use and have access to XRP. So through Uphold, we have companies, institutions using XRP, buying XRP.
Banks, brokers, fintechs, plugging in so that they can embed blockchain and digital assets within 3 months instead of, 3 years if they were trying to build it themselves.
In what ways have you seen the broader narrative or perception shift across the industry, even of course, in really just a heightened awareness, maybe in the last 12 to 18 months?
Well, I think the main difference is it's now clearly a pro-innovation administration in the United States. I've worked at Uphold for 8 years now, and for most of that time, blockchain and crypto was a pariah technology. It was an experimental sandbox with no clear rules. The regulators didn't want to touch it. And Europe kind of kicked off the process back in 22 with the introduction of MiCA. Then the UK followed, then you had Singapore and Australia, and then finally in the last 9 months, the US administration has come in late to the game, but in a very short period of time, started creating a comprehensive set of rules.
We have the Genius Act in so far. We are waiting for the Clarity Act next, being signed from POTUS before the end of this year.
The main difference is, as a company, we've onshored back to the United States, where our natural home is. Most of our customers in the US, we're 90% US based, and we feel we can plan properly now. For years, we were taking the narrative that blockchain is a new infrastructure for financial services out to the market. Nobody wanted to listen. If you're a traditional financial services company and there are no clear regs, you're not going to want to engage. Over the last 9 months, we've got a rich pipeline of around 50 TradFi companies who want to catch up and offer digital assets.
You just launched the first retail tokenized US dollar deposit. How big of a deal is that in terms of the necessary context and perspective? And what was the journey like for that creation?
Well, when you think about it, stablecoins are a strange thing. It's a US dollar issued by a fintech. Why is a fintech issuing a dollar? The natural issuer of a dollar is a US bank. And stablecoins have all kinds of disadvantages.
Right, we do have Ripple launching their own RLUSD digital dollar despite being a fintech company, but they have applied for their bank charter to become a bank, a digital bank. And we do have Ripple also having a ton of transmitter licenses across the US, I believe almost all of them. And we do have Ripple also falling under regulations as well.
They don't count as cash on corporate balance sheets. They don't pay interest. You don't always know if they're properly reserved or not. They don't come with Reg E payment protection.
We have monthly attestations for the RLUSD. So that ensures that everything is backed 100%, just like Uphold.
And so what we've done with the US dollar deposit token is we're going to be the first platform to offer our customers all around the world US deposit accounts out of the United States. So if you're in Venezuela or Colombia or Argentina, you'll be able to get a US bank account. But the more important point is you're going to get a dollar that's issued by a US bank that moves on the blockchain, but it pays interest, sits as cash on a corporate balance sheet, is FDIC.
Right, let your money work for you. And this is a great way to essentially onboard the global economy to the US, to US banking systems, accounts, dollars, and so on, right? To attract even more liquidity towards the US economy and the markets.
Insured and has Reg E protections. And when you think about that, that's a way more attractive proposition, especially to companies. Think about enterprises. Can you see Walmart sitting on $100 million worth of stablecoin where there's no identity attached and you don't know where the stablecoin's been? It's not paying interest. Wouldn't you prefer to sit on $100 million worth of dollars issued by a bank sitting on a blockchain that are insured and paying you interest?
Sure.
So we think this is a really transformational moment. Our view is that stablecoins are intermediate technology. All of the hype at the moment is around stablecoins. But stablecoins, they will continue, but there is a very big market for US dollars issued directly on a blockchain by a US bank. And that's what I think we're going to see.
And we will see XRP connecting US dollars on chain, stablecoins, essentially every asset.
Increasingly over the next 3 to 5 years.
Talk to me a bit about the partnership with USBC and Vast Bank. How do you see this bridging the gap between more traditional finance and more efforts on chain?
Sure. Well, I think it's a tripod.
Right, so it's all about using a trusted digital dollar such as the RLUSD. Just because Ripple is a fintech company doesn't mean the RLUSD can't be trusted.
Party agreement between the three. So USBC is like the scheme. Think of it as a fifth rail, a little bit like Visa or MasterCard. Then other banks will plug into that rail. Vast Bank is going to be the issuer of the bank accounts and the issuer of the dollars on chain. I think from a customer experience, what's fascinating is you'll be able to have a dollar that not only has wallet credentials, so you can send it on chain to wallet addresses, but that same dollar can also travel through traditional rails. So you can pay your electricity bill through ACH. You can have your salary paid in through direct deposit, but then have the dollar work much harder for you because it can move into DeFi, or you can do traditional stuff in your daily financial life.
How close are we to DeFi truly going mainstream, and what work is left there to be done for the broader industry?
Well, I think pretty close. I draw a big distinction between anonymous DeFi, which my personal view is that's going to remain an experimental sandbox, largely the preserve of techno nerds and, a laboratory of experiments, but it's not going to go mainstream. But there are a lot of experiments from that space, particularly in the borrowing and lending space, the big liquidity pools that have now been through various market cycles and they're battle tested. What we at Uphold are very focused on is surfacing through our app the best of DeFi, but in a fully KYC'd and fully compliant way. So in the second half of this year, we're going to be opening up an on-chain borrowing and lending protocol that will allow people to take cash loans against their digital assets. The cash loan is actually given out by a DeFi protocol called the Exactly protocol. So it manages the collateral. You can borrow against your digital assets. You don't have to sell your digital assets, so you get to hold your positions, but you get cash you can use. So it makes your assets work much harder. Interest rates typically 4% below what you can get from a bank. Equally, you can choose on Uphold to deploy, you can extend the loan, so you can earn a yield on your digital assets by taking the other side of that protocol and lending the digital assets that provide the loans.
All right, Simon McLaughlin, CEO at Uphold. Congratulations on all the success, and thanks a lot for chatting with us here in Las Vegas. Great to have you.
Thanks, JD. Thank you. Good to see you.
So overall, it's all about bridging DeFi and TradFi together. That's it for the video. Hope you guys enjoyed, and I'll see you guys in the next one.